Hello everyone. This video we are going to look for how was the IPO price fixed. Okay. So far we looked for many videos related to IPO. So right now you're going to look for how the price band, okay, how the companies are fixing for IPO price. What are the methods available? Normally which method the companies are using, why, what's the reason. Okay, so these all those things, what will be the book building process, okay, these all those things we are going to look in this video. This will be helpful for the beginners, those who are going to subscribe for the IPO. Without knowing this, if you're subscribing in a sense blindly, then you could fall for the price. In a sense, you could raise many queries, why the price has been fallen, why it is underpriced, why it will be overpriced and all. Okay, so this basic information will be helpful for the beginners. So without making delay, let's see for this. What is IPO? So IPO, everybody knows, that is initial public offering. So initial public offering, in a sense, for a private limited company, they will come for the they will plan to issue share into an public. Okay, public in a sense, they will include for institutional investors as well as for the retail investors. So who's the institutional investors? In a sense, a big investors, okay, those who are investing for higher amount, those people coming under for institutional investors, okay, the fund managers, these kind of people will be there, right? So the big institution will be coming under for institutional investors, and retail investors same like us as an every individual investors. Okay, so those people coming under for retail investors. So if any company required for a fund, they need to establish their business, they need to fulfill their debt, or else if they required for any short term finance, in a sense, these kind of major reasons they are coming into an IPO. Okay, so they will issue the share into an public, that is called it as initial public offering. So the company coming into an market, simply they will give for one price. Okay, public, you can buy for this is 10 rupee or 90 rupee or 10 dirham or 20 dirham, like that. Not like that. There should be a process is available, right? If you're buying for some biscuit packets or soap or juice or something like that, some price has been fixed. How they are fixing the price? There also they are fixing different prices, right? Wholesale price, retail price, for buyer some price. Okay, many prices will be available once produced, and if it is coming to an market, as the same way they are issuing into an IPO also, there should be a process available. Okay, so for a particular product, example, if you're taking for a particular product, in a sense, it will include for raw material cost, labor cost, and how much of building, that is a land cost, how much of material they have been used, any particular machinery they are using, in a sense, that maintenance charges, these all those things will be included, and they will compare for the market with the other substitute product also. Finally they will fix for the particular product, right? As the same way, from here also they will do this kind of pricing only for the shares. So what are the methods they are following and fixing for the IPO price? In a sense, there are two methods available: fixed price issue method and book building issue method. So for the fixed price issue method will be the olden method. Okay, for it is a traditional method. Earlier this kind of pricing method only used, and they fixed for the IPO prices. But currently book building process method only most of the companies are using, as well as a regulated board also suggested for book building process method. If you're asking a question, still some companies are using for fixed price method, in a sense, I will say as yes. Okay, still some companies they are using for fixed price method. Okay, so those major difference we will look later. Right now we can look what is fixed price issue. Okay, what are the bases? So from here the people will involve for issuer as well as for the underwriters. Okay, these two people will involve, and they will evaluate for financial health. What is a financial health? That is what balance sheet. Okay, so if the company financially wealth or not, how you're determining, in a sense, with the help of financial statement, right? So financial statement will be including both asset as well as for the liabilities. So from there you could know the company having for more asset or more liability. Okay, so by that way you can take one weightage. And second, what will be the growth potential? Okay, if they are producing for particular product, in a sense, any growth will be there for current as well as for the future. Okay, and what will be the market condition, how many competitors will be there. So they will compare these three, as well as the main part, they will compare this company with the industry. Say for example, if you're taking for particular recently I posted for one video the upcoming IPO, right? It's related to alpha data technology company. So the technology industry they will compare. So while comparing with technology benchmark with the alpha data, how it is performing, so these kind of things and all they will compare, and finally they will fix for the fair price. Okay, so for the fixed price method, this is what they will do, and finally they will fix for the price, and after that they will not do any changes. Okay, so from here, if you're looking in a sense, the underwriters behaving like a intermediary. Intermediary in a sense, what it is, a middleman. Okay, so middleman between the firm as well as for the public. Firm in a sense, what? Company. Okay, for public in a sense, we means retail investors as well as for the institutional investors. So what this underwriters will do in a sense, they will do for structure process, they will do. What will be the structure? Okay, how we can make for a document, how we can do for a prospectus, what are the information we need to contain in that. Okay, these kind of things they will do, as well as priced in a sense, for fixed price they will fix for the prices. Okay, after inviting after looking for these kind of things, they will fix according to the market condition. This is what each unit of the price, and based on that they will execute. So these all the work they will do for in a proper way. Who will do it? In a sense, underwriters will do. This is what the fixed price issue. But currently, which kind of companies are using in a sense? SME, that is small medium enterprises, still they are following for this fixed price issue method. And well-known method, that is a book building issue method. What is book building issue method in a sense? The process of price discovery. Price discovery in a sense, they will collect the information from the who will collect? The underwriters. Who's the underwriters? The financial institutions. Okay, one who is providing for financial services, say for example bankers and other financial institutions. Okay, these kind of people coming under as a underwriters. Okay, and normally we can say for lead managers, as well as for book runner. These are all the other terms for underwriters. Okay, the term will be differ, but their work, the scope of work will be the same only. And from here it is mentioned as underwriter to call for bids from various institutional investors. What's the meaning of call for? It is a negotiation. Okay, so underwriter, what they will do, the big investors as well as for institutional investors, as well as big companies. Okay, they will go and they will give for bidding purpose. Okay, and they will negotiate how much you will buy this company share. This work and all who will do? Underwriters will do, as well as fund managers and others. These are all the groups, underwriters and fund manager. These are all the group of people. They will do it. They will fix for the price band. They will do it. There is no fixed price, but there is a price band. Okay, from here they will fix it. After comparing all those things, they will fix the price. But from here, the final fixing price, they will not do it from this. Okay, the price band they will do. Price band in a sense, what? There should be a range. The lowest price we can call it as floor price or base price, and the highest price we can call it as cap price or ceiling price. Okay, say for example, from here we can look, this will be Swasth. Okay, coming 20 and 24th Feb they are going to announce for because the upcoming IPO only, this one. And from here the price range you can look 94. As the same way for HPTL, if you're looking in a sense, it will be in 108. So it means what? They followed for book building process or fixed price method. So if you're looking over here, 94 only, there is no ranges available. So this means fixed price issue method, this method they followed. As the same way, HPTL, if you're looking 108, so they also followed for fixed price issue method. And from here you can look, Beansazen, they followed for 165 to 175. So there should be in ranges available. this lowest price, right? This is a lowest and this will be the highest they fixed, right? This lowest price only we told over here, it's a floor price or base price. And this 175 higher price, na, this higher price they call it as for cap price or ceiling price. That is what the difference between base as well as ceiling, and floor as well as for cap. Okay, and what you need to look over here, this differentiation will be there, no, it will not exceed for 20%. That is a rule for the regulatory body. If you're fixing for 165 as your own, you should not fix for 220, 230. It is not possible. So 165 into 20%, if you're putting in a sense, how much it will come? Almost 30, 33 something, right? So 165 plus 33, if you're adding in a sense, 190, 198 something, right? Maximum you can fix, that is what the price. Okay, maximum. So they fixed 175, that is a 10 rupees only excess. So that is a very important rule for this one. It will not exceed maximum 20%. And what's the difference, major difference between these two? That is a fixed price issue as well as book building issue in a sense. The first one which you are looking for, book building, it is a popular method. Okay, most of the companies they are using for book building issue only. And for fixed price issue in a sense, it is a traditional method as well as for less common. Okay, most of the people did not use, only for small companies they can use. And from here, offer price we can revise. Offer price we can revise in a sense, they will issue they will mention for this range, right? Once you are applying all those things, some people they can quote for 178 or something like that in a sense. So within this range, if it is 178 or 180, so you can revise this price as 180, depends upon the demand and supply. Okay, but in case of fixed price, you cannot revise the offer price. Okay, that is a thing. And for book building process, depends on the supply and demand, the price will be vary, and from here the price may be undervalued or overvalued. Okay, what is undervalued? After you fix the price, you will not get it for respect to subscription, some cases. Okay, and once issue, the price will fall down, and some cases it will be overvalued also, will be the respect to subscription may not be available. Say for example, if you're fixing for 1000 rupee, okay, the subscription will be, you're expecting for 1 lakh, but the subscription will be coming for only 50,000 in a sense. It means you overpriced. That's the reason most of the investor they not like to invest in your company. Okay, so that is possible under the fixed price issue method. Okay, and from here, book building process, investor can bid at any price. Say for example, if IPO will be announced, you are looking what process they used. So they mention as book building process in a sense, you can fix at any price. You can quote, say for example, from here it is available 165 to 175. You can quote for 180 or 190 at your own price you can fix. Okay, and the final price fixed by the company depends upon the application received and what will be the amount will be there, if it is oversubscribed or undersubscribed. After that only they will decide. But in case of fixed method, you cannot subscribe at any value. If the subscription they mention 94 in a sense, they will issue for 94 only. As well as you also give the application only for 94, you cannot put for 95 or 100 or something like that. Okay, that is a major difference, this one. Okay, so you can subscribe only for the fixed price which has given for the respective company if they are following for fixed price method. But in the book building process method, you can quote at any price. Okay, and a very important thing, this fixed price method, they will fix in advance. Okay, but from this people, what they are doing, they will collect all the applications. Okay, the final price they will fix at the after the end of bidding process only. And majority of companies followed by book building process. Only for small medium enterprises they will follow for fixed price issue method. I think the major difference between for book building issue as well as fixed price issue you can understand. So which is best for the investor if you're going for choosing an IPO? The best will be book building only while compare with fixed price issue. If you're taking a small risk, you can go for fixed price. It will be very rare. I told you small medium enterprises only they will adopt for this method. Okay, majority of the companies they will use for this method. And say for example, from here, what is the process they will follow book building in a sense? The pre-issue planning, okay, the market as well as industry research, okay, and they will keep it one price. These and appointment of underwriters, these all those things will done by issuer. Who's the issuer? That is a company. And remaining part, once appointed as underwriter, all the part until for allocation, who will do? In a sense, underwriter will do, issuer will not do anything else, okay. So underwriter as a person will do it for marketing, pricing, okay, as well as bidding, and until allocation, the price fixation, everything done by underwriters. So for that, they will charge certain percentage, okay, it's around for 4 to 7 percentage of commission they will charge once completed all the works, okay. If it is oversubscribed or undersubscribed, everything under the hand of underwriters only. So if the underwriters are smart, your IPO will be in success. So before you're going to an IPO, you need to choose for the best underwriters, okay. So I think this basic information will be helpful for the beginners. If it is helpful, you can like as well as you can comment below. This will be helpful for the learners, okay, they can learn it. Even for the students also they can learn, as well as for those who are interested for stock market, they can learn, okay. And you can comment below, really this will be helpful to you or not, okay. As you are a subscriber, you can keep on watch, and if you're a new user, you can subscribe and follow this channel and for getting for financial insights. Thank you friends, thank you for watching this. Bye.